Let me ask you a question. If I told you there was a business where 93% of customers lose everything, a business that makes guaranteed money no matter what, and people just keep coming back, convinced this time will be different, you'd immediately assume I'm talking about a casino, right? And honestly, that would be generous, because at least in a casino, the rules are honest. You already know the odds are bad. You know the house edge is baked in, and nobody pretends roulette is a career path. But the same can't be said for what I'm going to show you today. And that's because it's worse than a casino. But before I jump in, just a quick preface. I know this video is a little different from my usual ones. If you're new here, I usually make videos about market news, investing, and all the fun ways capitalism can quietly rearrange your future while you're microwaving leftovers. But what I'm talking about today is so widely accepted, so normalized, and so clearly a scam that I could not make a video about it. So stick with me until the end. Because once I lay this all out, I think you're going to feel the same mix of shock, anger, and disbelief that I feel. And if you like these kinds of videos, let me know in the comments and I'll make more. Because the finance industry is full of scams, and the one we're talking about today is hiding in plain sight. I'm talking about proprietary trading, or as it's more commonly marketed, prop trading. And before you start typing your comments, I'm not talking about the glamorous Hollywood version of trading, where some hoodie-wearing savant turns a 10K into $1 million while drinking espresso and whispering G-Alpha into a Bloomberg terminal. That version of trading is 1 in a million. In this video, I'm talking about the more common version, the retail-facing version, the one with challenges, profit targets, drawdown limits, and Discord servers full of people posting screenshots of green days right before they disappear forever. And if you think this is just some niche corner of finance, it's not. Prop trading has exploded in recent years, and videos promoting it are a key driver behind the industry's growth. These videos sell a pipe dream on social media and have quietly turned prop trading into a $12 billion industry that has Gen Z and millennials hooked. But here's the part they don't put in the TikToks. Did you know only 7% of prop trading accounts manage to turn a profit? And of those 7% of traders that do manage to turn a profit, the average return is about 4%. Let that sink in. Let's say you beat the odds. You're disciplined, you're consistent, and you have an actual edge. You make it into the top few percent of traders who earn that 4% return. But then at that point, the question becomes, was it worth it? And the answer is overwhelmingly no. Because 4% doesn't just underperform the S&P 500, it underperforms gold, real estate, and even United States Treasuries. This means you can be a prop trader and stress so hard your hairline needs a trip to Turkey, pay mind-boggling fees, and spend years chasing profitability, or you can do absolutely nothing. Take nearly zero risk, get favorable tax treatment, and earn a comparable yield by just buying U.S. Treasuries. Because a 4% return isn't just underperforming, that's essentially matching the risk-free benchmark. So if the odds are this bad, the returns aren't impressive, and the alternatives are objectively better, why would anyone do this? And the answer is simple: social media. Because if you scroll through the finance side of TikTok for 5 minutes, you'll see the same stories on repeat: a rented Lamborghini, a broccoli-haired teenager flaunting money, and a profit and loss screenshot with no context. They tell you anyone can be like them, that losses are just a part of the journey, and that failure only means you didn't work hard enough. And the worst part about it all is the sales pitch is working. Because what was a nearly non-existent industry 5 years ago has now entered the mainstream. So the million-dollar question is, who's actually winning from this? And spoiler, it's not the traders. It's the firms that provide the quote-unquote funding. Because here's how the business model actually works. A trader pays an upfront, non-refundable fee to attempt a trading challenge. In return, the trader receives what looks like a $50,000 or $100,000 trading account. But it's not real. It's a paper trading account on a simulated platform. Then the trader goes about trading. If the trader fails the challenge by hitting a drawdown limit, the firm just keeps the trader's original fee. The account is reset, and both sides move on. If the trader succeeds, the firm may pay out a profit split where the trader receives a percentage of the simulated profits and the firm keeps the rest. But here's the crucial detail that never gets mentioned. These payouts don't come from market profits. They come from the pool of fees collected from the other traders who failed. And this is where the entire thing clicks. The entire business model of these prop firms is built on one statistical concept: gambler's ruin. The fundamental idea behind gambler's ruin is that in any game of chance, where the gambler has finite capital and a negative expected value, it is statistically certain that the gambler will eventually hit a string of bad luck and go bankrupt. And it's not because the gamblers are stupid or reckless, but because you have a negative expected value, and time is working against you. I can break this down in an even simpler example. Let's say you're playing roulette and you only bet black. There are 38 pockets on a roulette wheel, and 18 are black. This means you have a little over a 47% chance to win on any given spin. So you play a few rounds, and you get on a winning streak. But that's where the gambler's ruin concept starts to set in. Because every single spin of the roulette wheel has a negative expected value. It doesn't matter how calm you stay or how good you feel about your system. The math doesn't care. A 47% win rate means you have a 53% chance to lose. And because of this, you will eventually hit a bad streak. That's why casinos don't need to cheat you, they just wait and let time do the work. The longer you play, the more certain your losses become. Not possible, not likely, inevitable. Now, let's talk about another problem that's entered the mainstream, and that's online privacy concerns. According to the annual data breach report by The Intercept, the number of data breaches worldwide rose 211% from 2023 to 2024. These cybercriminals don't discriminate. They'll expose your phone number, financial information, health information, and even your social security number. Once your personal information is exposed online, it gets copied, packaged, and sold through data brokers and other sites you've never heard of. That's how scams, identity theft, and other online illegal activities usually start. And that's how these prop firms make money. That's the edge. They don't make money by finding the next generation of elite traders. They make money by waiting for you to fail. Because gambler's ruin doesn't require stupidity or recklessness, it just requires time and repetition. And when you combine the math with things like strict drawdown limits, capped upside, and reset to zero failure conditions, the outcome is inevitable. From these firms' perspectives, it's just a volume business. They don't care who passes challenges or who trades on their platform. They just care about how many people try. Because if 300,000 traders attempt a challenge and on average, 279,000 fail, the firm is okay with the ones that succeed and cost them money. In fact, they like it, because the ones that succeed are the proof of life, the illusion of hope. They use the winners as marketing so they can reach a scale where the business model makes sense and gambler's ruin can take over. And once you see it that way, everything clicks into place. Prop trading isn't a story about bad traders making mistakes, it's a story about a system that only works if most people lose. Because in prop trading, you aren't the customer, you're the input. Your attempts fund the system. Your retries keep it alive. And your rare wins market it to the next wave of delusional traders. So if there's one thing you take away from this video, please stay as far away from this industry as you can. These businesses sell a pipe dream and profit off your financial ruin. And if you've heard any trading horror stories from friends, Reddit, or even personal experiences, please drop them in the comments. The more we can shine a light on this predatory system, the more we can help people from blowing money they can't afford to lose. And remember, sometimes the best trade you can make is no trade at all. Thanks for watching.